Welcome to Theo Trade. This is Don Kaufman. Here we are. It is May 11th, 2016, and welcome to the market, which has been Mr. Toad's wild ride as of late. You know, I actually am starting this evening, and I say Mr. Toad's wild ride because the S&Ps were down 20 today after having been up 20 the previous day over there, but the only market that seems to have picked a direction is none other than the bonds. So tonight, we'll keep it short or keep it sweet. We're going to be looking at the bond trade, and the reason I'm looking at the bonds over here, you know, when I mention the bonds, I'm going to use the TLT for this particular trade and trade setup over here. Some of you may or may not be familiar with the bonds, but I tend to find that the bonds themselves, they intimidate because they trade in ticks. Yes, it's still old Spanish galleon times where ticks are used. Ticks are nothing more than fractions. There are 32 ticks to a 1-point move. Nevertheless, I digress and go back over to the TLT. And on the TLT, I'm going to open up to a full screen over here, give you guys a little bit of view. So the TLT, which is the bonds, breaking here almost to highs. What highs? I mean, you got to stand back and admire, okay, what the bond market has ultimately done. So here we're looking at a 3-year weekly, but that's not far enough. Let's get crazy. Let's go back over here to a 10-year monthly. That's a 10-year monthly. Why do I have to put this in a little bit more perspective? Because, you know, on a 10-year, quantitative easing started back in this neighborhood, back over here. Right, when the first time the bonds actually spiked up because the financial world was coming to a bitter end. So this is where quantitative easing ultimately starts. They take interest rates in the short duration rates and the Fed Fund futures down to 0%. What do the bonds do? They spike up, they turn around, they sell back off. And again, you just have to put this into a much longer degree in perspective. After all the quantitative easing, all right in this neighborhood over here is kind of where quantitative easing ends. So what does that mean? It means the Fed is no longer buying the bonds. It sells off a little bit, but that's all right. The reason I bring up this 10-year monthly over here, you realize right now we are a stone's throw off of the all-time high inside of the bond market. I mean, this is it. This thing is, you know, it's printing up here. We're just off the all-time highs. Now, what might you think about this trade? So I am a big-time contrarian, and that means I'll take the opposing side of a market. And that doesn't mean every time the market gets bullish, I get bearish. Not at all. It's about the right risk and the right reward. What's setting up for in the TLT over here, and I want to be very frank, you know, everything I try to do here at Theo Trade is the most actionable ideas and trades that you can do. This is going to be a little bit of a longer duration setup, and it's because it's such an opportunity that I'm mentioning it here. And what I'm looking for, when I say a little bit of an opportunity, I'm actually going to be building a physical short position in the TLT and in the bond market. Okay, now that short position, I am going to start building it, all right, just at about the 132 range, okay, in the TLT, and I'll continue to ladder the position to get my size on, and ultimately I'll be fully allocated if and when the bonds hit the 136 range. I'm going to be fully allocated. Now, the reason I draw 4 equal lines, you know, this is just the age-old idea. Never allocate capital all at one time. Stagger into trades, stagger out of trades. Okay? The intention here is not to average in. I just despise the, you know, that age-old idea of I must average down. Does that mean you're wrong the entire way? Here, I don't want to miss an opportunity, but at the same time, I don't want to go full allocation. Here, I might go out, for example, and short 100 shares. Out of here, I may short another 100 shares. Here, I may short another 100 shares, and I'll continue to ladder the position because there is no telling what that top happens to be. Okay, but I know that if I'm fully allocated at 136, and that means I have the full size that I intend to put on. If I fully allocate at 136, okay, what happens if we go to 140? I'll still be comfortable with the amount of risk that I'm taking, and I'll still want to maintain, again, that short position. Now, many of you have the intent of possibly doing this in the TLT. The next question is, how long are you willing to hold this? Again, I am willing to hold the short position for a quite considerable period of time. This cannot be done. A short trade is not going to be done inside of an IRA or tax-deferred account. Here's a trade that I may hold for many months. As again, these bonds topping out at like 136, they could very easily spike even into that 140 range before finally cooling off. But you're never going to time a top. You're never going to time a bottom. So we allocate, we stagger in to ultimately get our allocation. And if the market gets up to 134 and fails from there, well, fantastic. Then I got partial allocation on. But I'll be fully allocated. Okay? And this trade has to do with the risk reward out there. So think about it. Again, it's I think an amazing trade opportunity. It's a much longer duration trade. And then once we are allocated into the short bond position, what we're going to do is we're going to start to sell out of the money puts against our short position. So we're going to finance being short. Why do you have to worry about that? Because the TLT pays a dividend. And that dividend over there, 26 cents a month, well, we're going to go out and we're going to sell puts against the short shares. Now, if you're thinking about doing this in an IRA, one last warning. Do not go out and buy the TBT. Do not do that. It's an ultra short. It doesn't track, okay, the TLT inverse very well. Okay, it's a double inverse, and there's high risk in this particular product, the TBT. It has not done a good job of tracking it, so I would not suggest, if you are going to do the TBT, I would not suggest holding it for any more, okay, than maybe 2 months, as the product itself can degrade over time. So I want to thank everybody for joining us here at Theo Trade. Again, watch out for this volatility, because every sign that we see in the broader market, I'm not talking about just short-term volatility, every sign the market can throw off for volatility, it's throwing off at you. Are you reading those signs? Gold, incredibly volatile lately. Okay, some of the commodities starting to get volatile yet again. The volatility futures were even in motion today. Okay, every sign, the bonds, all-time highs over here. Read the warning signs. Know what your risk is right now. Thanks everybody for joining us here at Theo Trade. My name is Don Kaufman. Be back on in chat first thing in the morning. Have a good evening. Bye-bye.